Australia's financial landscape is dominated by the big four, but in the last couple of years, neobanks have begun to make an impression on the market. The likes of Zinja, 86400, Up and Volt, all been slowly building their customer base, but it is a bit of an uphill battle. Malcolm Macnaughtan from digital banking provider Backbase says there are challenges in converting mass market customers to new banks, and he joins us now to tell us more. Malcolm, thanks so much for being with us. Maybe just tell us just really briefly what you guys do, because you're really there to try and, I guess, take some of those very big cumbersome systems owned by, you know, the big four and their peers and make them work more like one of these digital disruptor banks.
Yeah, thanks for having me. That's right, Backbase is a Dutch software company, but we work with banks all around the world, helping them to transform all of their systems in what, you know, the sort of general terminology is transforming into digital first businesses. And whether it's the tier ones around the world or whether it is the new kids on the block, the neobanks, we have a platform with a flexible range of capabilities that can help each of them accelerate the work that they need to do to get in shape for the increasingly digital future.
Yeah, and it is increasingly digital. We've had a number of new entrants into the market here. We've had 3 new banking licenses in the last 6 months or so, but the big four banks still have a stranglehold on customers. Why do you think? It was only a couple of years ago, I think you were more likely to get divorced than actually change banks as a customer.
There is a lot of inertia around that, yeah. But I think that is changing, you know, and certainly the big banks are aware of the threat that there is. If you look at the trend from last year in this market, for example, you know, their share was down, and the effect of competition is certainly starting to show. And, you know, that competition comes from a few angles. Probably the one that the major banks are most concerned about is the threat from the big techs, as they're called, you know, the Googles and so on. And the reason is that as banking becomes increasingly digital, you know, it moves more and more into the territory of natural advantage for those big techs, you know, and especially their capabilities with data, their ability to extract value from data and purpose that data, you know, to create new products or to lift service levels is very significant. And when you look at, you know, examples, for example, like in the US, you see, you know, Amazon, Apple. There was some rumors just at the end of last week about Google making a fresh move into debit cards. And so, you know, a recent survey of a wide range of banking executives had over 70% of them now saying they regarded these big technology providers as a significant threat. And so, you know, the challenge for the big banks in responding to that threat is that, unlike those tech leaders who have built their businesses from the ground up for technology agility with these inbuilt capabilities for really crunching very large volumes of data very quickly, the big banks have a very big technology landscape that's been accumulated over many, many years, you know, and it features many different systems and many different vendors with many different vintages of technology and a very complex set of arrangements for making them all work together. And so, you know, as we move into this increasingly digital era where the competitive landscape is changing more and more quickly, we have regulators like the ACCC introducing new regulations to drive more competition, then that legacy of all of those different systems and the siloed environments that they have really is quite a handbrake on their ability to respond to that threat.
I wanted to ask you a bit more about that, Malcolm. I mean, you guys can obviously work with these banks on the platform and their technology and sort of bringing those up to speed and helping them compete with, say, you know, a Google, a digital native, if you will. What about those sort of the cultural stuff that holds them back? These are big businesses. They've been doing things in a certain way for a very, very long time. And to make that entire shift is not easy and it's not quick. Do you work with them around that side of transformation as well?
We do. And depending on their appetite, we have quite a large professional services team that we can introduce and share our ways of working. But the cultural change goes even, it is much larger that they need beyond just, their work with us. And so, typically we see banks bringing in executives from those kinds of digital businesses that have had a lot of experience, building those kind of cultures as part of shifting their culture.
How do you see over the next 12 or 24 months,
I think
how will the landscape be different in terms of the banks? Will the neobanks be able to increase the pace of their market penetration? Because particularly business customers are going to want a sort of almost seamless access to credit. You're going to be able to get some of the government-inspired lines of credit and government guaranteed credit through the smaller banks now. That's got to shift customer thinking.
Yeah, I think there's going to be a lot of change over the next 24 months. And I think, it's interesting to reflect on the role of the coronavirus in that as well. And, we're talking about digital banking and, there are some obvious changes. The physical restrictions mean more people using digital banking. There's obviously, increasing need, as you were mentioning there, for digital services for assistance. And so an opportunity, digital banking, unlike traditional banking, is much better able to provide insights and other ways of helping customers that need help in a time like this. But I think the really interesting one, which McKinsey highlighted a couple of weeks ago, is that if you look at the history of banking, major shifts in market position happen during downturns. And so, the next year or two is really going to be a critical period for banks here, and going to shape their profitability and position for the medium to longer term. So in terms of the neobanks, certainly the capabilities they've developed to simplify acquisition of new customers. Some of them are very, very easy to sign up to, get your identity verified. I'm speaking about retail banking here, and then get in 5 minutes. You're a customer of the bank and you've got a credit card. It's in your digital wallet, and off you go. On the business side, you asked about that. It's obviously a little more complicated, and there's a question, I think, about the extent to which businesses want a little more human involvement. And so it's interesting to see, you've got 86400, Zinger and Volt really focusing on a retail banking experience that's mostly digital, mostly automated. But on the other hand, you've got Judo, who are taking, still a neobank, still leveraging technology, but really emphasizing a human approach and doing very well. They've captured significant amounts of retail deposits and really grown their loan book very, very, very quickly. So it'll be interesting to see. I think that the key is there's going to be a lot of change over the next 12 to 24 months, as I said, because history tells us that's going to be the case.